Let's get to portfolio positioning and what sectors have benefited from the changes brought in by COVID-19. It feels as if we have this conversation a lot, but let's get stock specific with James McBeath, portfolio manager at Paradise Investment Management, because really, there's been a massive shift, and he joins us now to talk about where he sees things. Welcome to the program. It's wonderful to have you with us, James. Is there a particular thematic that you're looking at, particularly at this stage of the game in relation to COVID?
Yeah, certainly. Good morning. Great to see you this morning. I think, as your previous speaker just touched on, this has been no ordinary recession in that, as we look at things today, whilst underlying wages and employment have been quite problematic, the government and central banking response has been so material that actually from a disposable income perspective, particularly once you consider areas like travel having been dialed right back, the remaining discretionary income has actually been surprisingly high for what you would normally expect during this type of economic environment. And so within that, we're just trying to make sure that we're understanding what are structural changes and what are cyclical changes across earnings, particularly what we've just seen through the August reporting season, and trying to identify those businesses where there's been a more structural acceleration in their growth that we would expect to be retained even once those policy measures are pulled back and hopefully social behaviour returns to a more normal setting.
James, I think one area where everyone agrees that life has changed permanently from the pandemic is the need for data, technology advancement, I know the pivot to online. Which name out there in the ASX universe would you go and nominate to be the best to go and take advantage of those tailwinds?
Yes, certainly. I think particularly the way we've tried to approach this is rather than trying to pick a specific winner from a technology perspective, is more to identify a business that is actually exposed to the broader trend that we see playing out over the next few years. And so NextDC has been a company that we've particularly identified within that universe. It's been an interesting company, and certainly during its early phases of growth has been a very capital intensive business. You did see them raise capital a few months ago during the midst of the pandemic, but as you've seen that shift towards working from home, digital communication, and then also, I guess, a sense of vulnerability for people that had all their infrastructure within their offices and then not being able to access them due to social distancing measures, I think we've seen a shift towards that more cloud-based method of operating, which NextDC is clearly at the forefront of in terms of their data storage and data center businesses.
Yeah, and James, you're not, we just have the charts up on screen, pretty impressive share price, very resilient obviously throughout this pandemic. They've still got big CapEx spending to come. You're not concerned at all about the valuation when it comes to NextDC?
Yeah, it's an interesting dichotomy. I mean, if you look at it on a short-term earnings basis, pick a multiple, say an EBITDA basis, the stock does screen relatively expensive versus its peers, particularly in the US. I guess where we contrast that is that from a relative maturity standpoint, NextDC and more broadly the Australian market is in a much earlier phase of its growth. And assuming that demand profile that we expect to be there, both in Australia and offshore, continues, then the rate of growth for a business like NextDC will be much higher than its peers. And so as you start to look 3 or 4 years out, the valuation looks much more reasonable versus those offshore comps.
James, talk to us about discretionary retail. Now, there's quite a divergence in views as to whether the tailwinds that we've seen from stimulus payments, not being able to go and travel, not being able to go and spend on services, will be replicated moving forward in a permanent basis. Where do you stand when it comes to those retailers?
Yeah, it's been a fascinating part of the market. I mean, general theory moving into a recession would be that discretionary income and certainly consumer discretionary in the retail sector would be hit quite hard. Obviously, with offshore travel being set to zero effectively, we've seen domestic retailers actually be beneficiaries through this phase. So what we're very conscious of is making sure that as we're analysing earnings for these companies, that we're not capitalising government-funded purchasing, for lack of a better way of thinking about it, and thinking more about those structural tailwinds. And so when we look at businesses like a JB Hi-Fi or a Harvey Norman, whilst we think, particularly in the case of JB Hi-Fi, the management team is an excellent operating unit, we're just conscious that there's potentially a portion of their earnings base that has been stimulus driven. Conversely, clearly we've seen a broad uptake of e-commerce and that sort of digital shopping environment. And again, whilst potentially some of that may have a cyclical element to it as people are able to be more mobile, there has clearly been a positive experience, particularly for a broader part of the cohort of the population that may never have used e-commerce before. And we suspect there's a structural element to that as well, which is likely to be there as the pandemic leaves us.
Hey, James, in the travel industry, we've had a lot of conversation about domestic travel, but that's clearly, even if we do pump money into the local names, it's not going to be enough really to make up for the lack of business travel that's taking across international borders and international travel. So, given that, if you agree, do you stay away from some of the names that have sort of been operating on the edge? You think of Flight Centre, yes, well capitalized now, but if things don't change, we spoke with Graham Turner, he said, there has to be more travel for them to make it through to the other side if international travel doesn't come back for a couple of years. So how do you sort of view the travel names here in Australia? Is it just a no-go zone, or do you, again, play that opening thematic in that way in any way, shape or form?
Yeah, it's a great question, and it's very much a tread with caution approach. We've actually been doing a lot of work on corporate travel management, and it's been quite a notorious stock over the last few years, particularly with some short selling reports coming out about the company. The way we think about it is, and this has sort of been a thematic across the broader Australian market, is that there's been a lot of equity capital raised over the last 5 to 6 months, which has really bolstered balance sheets of a raft of businesses, including those such as corporate travel and even Flight Centre, that are very heavily exposed to that travel thematic. Where we look at a business like corporate travel is that what the pandemic has forced businesses like that to do is really look within their own businesses and try to refine their operating models and become more efficient. And so as we come out of this pandemic, whilst travel may take, and particularly on the corporate side, may take a long time to get back to previous peaks, we don't actually believe that travel needs to get back to that previous peak to see earnings bases restored to where they were pre-COVID, just given that improvement in the efficiency of the operating base. And so with the balance sheet of corporate travel and their cash burn now effectively at a break-even point, notwithstanding that demand is only at about 30% of where it was pre-COVID, we actually believe that business is positioned that as that travel continues to recover, albeit it may not get back to previous peaks for a number of years from now, we actually think from an earnings perspective that can be restored more quickly than that overarching broad travel movement.
Okay, James, we've run out of time. I wish we could keep talking. It's been great to have you joining us here on AusBiz. We hope you come back sometime.
Thank you very much. Thanks for having us on this morning.